Have you ever wondered why so many people feel broke? Even when they're working hard, maybe even pulling a decent salary, you might be asking yourself, why is there never enough money left at the end of the month? What if I told you that it's not just about how much money you make, but how you handle it? Most of us aren't taught that managing money wisely is key to building wealth. It's our financial habits that often hold us back, not our income. In this video, I'll explain why so many of us are stuck in this cycle of living paycheck to paycheck. We'll talk about how to shift from spending on liabilities to acquiring assets, break down where your money really goes, and how simple tools like budgeting, micro investing apps can help you take control of your finances. And I'll share my personal story, how I went feeling financially stuck to breaking into tech and increasing my income dramatically. Now, let's take a closer look at this budget template I've created. I've broken it down in 3 key areas: income, expenses, and savings. By using this kind of sheet, you'll have a clearer picture of exactly where your money is going every month, how you can make adjustments to improve your financial health. First, we have the income section. Here, I've entered a salary of $3,500, which is about an average for many people. I've also added side hustle income of $500, and this is really important. Having multiple streams of income is a great way to increase your cash flow and build wealth. Now, let's move to the expense section. I've listed a typical monthly expenses such as rent, mortgage at $1,200. Keep in mind that even though $1,200 is a bit on the low end, and you could say that in a lot of areas in the United States, rent is so much closer to the 2000s, even for a 1-bedroom apartment. I thought this was best to do $1,200 for an average purposes across the United States. It's possible that this could be higher if you're renting your own apartment. This could be lower if you're sharing a space. But I thought that $1,200 would be a good spot to describe it as. I put utilities at $200. Depending whether, again, this all depends where you live. So I can put the sheet in the description so everybody can put in their data and see where it takes them. But we have 200 utilities at 200, groceries at 400, transportation at 150. Again, if you do gas, if you pay for anything like car insurance, you may have to make an addition on top of these bills. But these are all essential costs. Whether they're higher or lower, none of these costs are negotiable. There are things like subscriptions, which I've listed at 100. This is where you can often make cuts to free up money in saving or investing. The next section, it's saving and investments. I've allocated $300 to an emergency fund, $50 to micro investing apps like Acorns, and $150 for retirement. Setting aside even small amounts can grow over time, especially if you're consistent. Think of it as paying yourself in the future. Now that we've covered budgeting, let's take a look at a separate sheet that I have created to help you understand assets and liabilities. This sheet will give you a clear idea of what's adding to your net worth, what's dragging it down. If you're wondering why you're not getting ahead financially, this will help you see what's really going on. First, look at the assets section. There are things that increase your wealth. I've listed a savings account with $5,000, stocks and investment with $10,000, a real estate valued at $50,000, and a side hustle generating $8,000. These are all things that either bring money or grow in value over time. The goal is to acquire more assets over time and let them work for you. Now, on the other side, we have liabilities. These things cost you money. For example, I have listed credit card debt at $2,000. I have listed a car loan at $15,000. I have listed student loans at $25,000 and a mortgage of $150,000. As you can see, these liabilities weigh you down. They can seriously limit your financial growth. By comparing your assets and your liabilities, you can see where you stand financially. The goal is to build up your assets, reduce liabilities over time, This might mean paying down debt faster or investing in something that appreciates in value. Now, you can download both of these templates using the link in the description. They'll help you get a better handle on your money and plan for more financially secure future. Remember, it's all about creating small, consistent changes that will add up over time. Let's talk about something we all fall into at some point: consumerism. Ever notice how whenever you get a pay raise, the first thing you want to do is upgrade your lifestyle? Maybe it's a new phone, a bigger house, or a better car. It feels great at first, but then you realize your expenses have just gone up and you're not any closer to being financially secure. This is what's known as lifestyle creep. Every time we earn more, we spend more. And before we know it, we've locked ourselves in a cycle of bigger expenses and more debt. And that's a trap. Consumerism encourages us to spend now and worry about it later. But the later, when we're stuck paying off that debt for years. Now, here's where the shift needs to happen. Instead of spending every extra dollar, what if you practice delayed gratification? This means holding off on instant purchases instead of putting that money to work for you. Whether it's saving or investing, the idea is to build wealth for the future rather than chasing temporary satisfaction. For example, let's say you get a $500 raise. Instead of immediately upgrading your phone, imagine putting half of that into a savings account or a micro investing app like Acorns. And for me, the reason that I bring Acorns into this is because I've been investing with Acorns for, I think, consistently now for about a year. In this account, I have $2,300, and this is on just micro investing, not any large amounts. Now, granted, I have put amounts in this that are larger than the normal, more than just the roundup. But this is just to show you how small little contributions can make up, and how big as well. Let me show you how small regular expenses can actually drain your wealth over time. Let's say you buy coffee every day for $5. That's $150 a month. In addition to a few subscription services, maybe 50 for Netflix, Spotify, and some apps. That's 200 gone every month on things that, while enjoyable, don't grow your health. In 1 year, that's $2,400. Over 5 years, that's $12,000. Now imagine if that money was invested and you could be looking at a significant chunk of savings or investment returns rather than just more stuff cluttering in your life. So the key to take away here is be mindful of lifestyle creep. Practice delayed gratification. And the goal isn't to deny yourself everything, but to make smarter choices with your money. Spend on what matters. Invest in your future. You'll be far better off down the line. Okay. Now, about me. So I first bought my home in 2021. This is a photo of me and my fiance. She was 19 at the time. I was 20 at the time. Now, we had spent a very long time saving up for this home. We had been saving since the very first jobs that we got when we were teenagers. And we were not big spenders. We were essentially a minimalist at such a young age, taught from both parents. And to say the least, if both our parents weren't rich, I'm from the Dominican Republic. My fiance is Mexican. None of us have any significance of any wealth at all in our lives. But we were we were taught to save money. We weren't big spenders. And I feel like that made the big difference between us buying a house when in our essentially our teens or early teens or 20s, because I had just turned 20 at this time, and spending money and buying things like cars. At the time, I wanted to buy a Challenger. Thank God that never happened, because I'd be sleeping in my Challenger today. And thanks to us buying this home in 2020, our payments are much lower than they would be at any 2-3 bedroom apartment. And not only are we contributing that money towards ourselves, but it's very low maintenance to keep this house for at least in Florida. Again, I'm not speaking for all the states or all the cities, but at least the maintenance that we have to do for our house is barely anything. And this was just done from us making earlier decisions, like than many other of our peers. At this time, I can tell you that our peers weren't buying houses. As a matter of fact, I think a lot of our peers were probably beginning to start college, or maybe if they were advanced, even going to university. But at this time, our peers weren't buying houses. We probably weren't even thinking about buying a house. We were thinking about buying a house because that was something that me and my fiance always wanted. We always wanted to have our own space. And I think that played a big role on why we got a home at that age, and why we're still in here today. This was 3 years ago. This was in the start of 2021, before the prices of homes went insane. Okay. Now, during this time, I wasn't making very much money. As a matter of fact, I was making very little money. I was making so little money that I was looking into apps that made you money, like Upside. If you ever heard of Get Upside? Get Upside is this app in Google Play Store. You can get it on Apple. Now, if you take a look at this chart, you can see that I was getting paid very low, but you can also see a lot of Webull and a lot of Robinhood credits, transfers going on all around almost every month. And this is because at this time, I was heavily invested in the stock market. I believe I had a portfolio of around $20,000. And that was prior to the year before in 2021, when my portfolio reached $102,000. Now, since that time, there have been quite a few changes. I have changed my investment strategy. I no longer focus exclusively in dividend stocks. I have changed my career. I'm now in a career that pays me double what I was being paid prior to this. And all of this was just a little bit took a little bit of work, but it ended up all at the end being worth it. And this is because I took the initiative to look at my life and how it was going, and how my financial health was affecting the quality of my life. Because let's be serious, guys. If you don't have any money, how do you expect to enjoy your life? If you don't have a home, if you don't have a roof, if you don't have even if you don't have the basic necessities. Let's not say you have any income to spend on extra, so any disposable income. Let's talk about the basic. That is what's important. First, get your basic set up, and this can include things like having a job, getting and getting an emergency fund set up. An emergency fund for at least 6 to, let's say, 12 months of expenses, at least. So whenever life happens, you won't be stuck and have nowhere else to go but to creditors or AMSCOT or or any of those quick app cash that give you cash based on your paycheck, any of those things, which just get you further into debt. So that's not a fun situation to be in, and having an emergency fund will prevent that from happening. Now, my goal to get into tech was accomplished on March of 2023. This was after I spent around, I think, 11 months of just working hard, getting certifications, and a lot of coding. I started with programming first. Programming was the first thing that I took into account. I started with beginner language JavaScript. With the 6 months into my life being nothing but code, and I was working a full-time job, getting paid that amount, and I decided that on the 3rd month of that job that I needed to change my career. And essentially what occurred was that I was looking up careers without a degree, or essentially high-paying careers without a degree. And a few came up. I believe there was radiologist, but that requires a degree. But I believe there's a 2-year associate's degree that you can get for this one, so it's not that bad as waiting for a bachelor's. So that one came up. I believe there was an electrician. That was a trade type of jobs. You know, if you're one of those in the trades, leave a comment. Say how much you like your lifestyle, and if you get well paid, well compensated, because I am seeing that the trades are picking up a little bit in the jobs lately. A lot of people are levitating towards the trades, and trades are being paid a little bit higher than they used to. And then there was software engineer. And the first thing I thought was like an engineer without any degree, and that was the first thing that jumped at me. And what essentially the software engineer thing, why essentially there is these jobs that don't require a degree? It's essentially because there's such a demand for these engineers, at least at the time. At the time, there was a large demand in the late 2019, 2018, 2017, maybe around there. There was a large demand for software engineers. Essentially, a lot of big tech companies, tech was bringing in revenues, making numbers, and needed more employees. So out of nowhere, a bunch of these boot camps and these job postings for developers with no degree started coming out. So it began to continue, and essentially it levitated to a trend where now it was possible to get one of these jobs without going to a 4-year traditional schooling. So during this time, a lot of boot camps, essentially boot camps, it was a 3 to 6 month intensive coding camp where you do nothing but code. It's it's essentially a full-time job for 3 to 6 months, and you learn nothing but coding. Now, I was very tempted. Some of these were very tempted. The problem with the boot camp is that they were around $18,000 to $20,000. Very expensive. Could the cost could it be worth it? Maybe. I mean, a lot of these some people were graduating from the boot camp and were going on to get $100,000, $90,000 salaries. Of course, that varies by state and the living costs around them, but $100,000 around 2019 could have gotten you a very comfortable, could have put you in a very comfortable spot. Let's just say that. Now, I didn't really want to pay for a boot camp, and I was reading that you could do it self-taught, but the issue with being self-taught is that it takes a little bit longer. It takes a lot of time. You have to work on your problems. You have to be disciplined. You keep yourself accountable. And I decided that I think I could do it. I thought I could do it. And again, at the point, I was just so desperate. And it was my third month at that job, and I just didn't like. I saw myself in the future, and I didn't like the idea that I could still be there. It was to me, it was kind of depressing. Not the people, because the people were amazing. It was just being there and getting paid that amount was just depressing. Because I mean, I was making, I think, $16 an hour, 16.50, and I fought for that 16.50. Let's make that clear. I fought for that $16.50, and I got it, and I thought I was winning. I thought I was a winner by getting that, because I had come from a previous position where I was getting paid a lower hourly rate, but I was getting more in bonuses. So I actually ended up taking a pay cut. And prior to that workplace, I was also trading stocks full time in 2020. So as I wanted to change my career, and I just didn't like being there anymore, and I decided to go the self-taught route, I spent around 6 months teaching myself how to code, building projects, creating different applications, web applications, learning back-end languages, and I created several applications. Ended up doing full stack applications because I essentially wanted to make myself more viable. So I worked in the back end and the front end. My front end isn't so great. It's good, but it's not great. So I thought that I gravitated more towards the back end. So back end became a little bit more of my focus during those last 6 months. Once I got to the 6 months, I started applying early on. And again, this was 2022. There was a bunch of layoffs that just had recently happened, and I wasn't getting any hits. And obviously, I've been reading that sometimes it can take up to 200, 250 applications, and I wasn't getting any hits at all on my applications. So I started thinking like maybe this isn't the best thing to do, but I continue coding still, but maybe this isn't the best way to approach getting a job. So at my current company, they have an IT department, and I started to talk to this administrator there. He was a great guy to talk to, very nice, and I spoke with him, and I believe I asked for training, and they had a new position that was opening up, I think, sometime in the future, and I wanted to get some training because I wanted to go to school, or at least have the company pay for my school, and then join the IT department there. So I think we trained, I think it was a couple times a week for at least 2 to 3 months, somewhere around that time. And as I was training there, I decided to get my CompTIA certifications. At the time, I was getting the A+. And while I was getting that course, the position was actually filled, and that was toward the end of those 3 months. The position actually ended up being filled, essentially because I believe that the CEO and HR decided it was better to get a guy that had experience in VMware, and that was a big hit to take because I was already working on courses. I was already planning going to schooling, and to be frankly, I didn't get any approval for any of this, but for me to even get my hopes up, but I was getting that idea that it wouldn't have been an issue. Now I have been in a company for a year or so, and I've always, in all my positions, I've always done a great job, and I've always tried to make a good example of myself as an employee. So that was a big hit that I took, and as soon as that day when I was told that it was filled, I think I went home that day, and I just said I wasn't feeling great, because frankly I wasn't feeling great. It was a big hit to take, and I went home and I coded. I coded from, I think that day, from 11 a.m. to like 8 p.m. I finished building a couple applications that I just needed some more time in, and just continue applying to those software engineer positions or junior software engineer positions, and I continued applying and continue building. And I actually continue getting my certifications because I was already studying for a long time. I was ready to take the certification test, or it's possible that I also may have had already the first part of the CompTIA, and I was just already trying to finish. I mean, if you start something and it's so close to finishing, why not just finish it? Because the programming is going to take what's going to take me a long time, or even longer time to finish, compared to getting this certification, which would be something more official to have on my resume. So I finished getting my CompTIA certification, and luckily for me, within a month or 2 months of that, there was a local technology company hiring in my city, and they were looking for a entry-level network guy. So I applied. I got an interview. I got an offer, and I took it. It was simple enough. It was that simple. I got a call one day and an interview the next day, and within 2 weeks I was already starting, and I put in my 2 weeks notice. My pay was going to be double from what it was prior to that, so I took it immediately. And frankly, it could have been a little bit on my end to take it immediately without even trying to negotiate at all. Which was frankly one of the points that I was going to do when I was getting one of these jobs, is not to sell myself short. But I got too caught up in the moment, and I was so happy that some of my work was paying off and that someone else was recognizing it, because I only had a high school education, and then the only thing that was in my resume in education was high school. Now I was able to add CompTIA A+, and of course my URL, my GitHub, and all these links and all these things. So it wasn't terrible, but I was just happy that after 11 months of hard work, this process took 11 months. Someone was, acknowledging the work, and I got an offer. Now I didn't think that moment would come through, because it's very hard to get a job. It's not only as a self-taught developer, but as a kid that just graduated high school a couple years ago and hasn't been doing really much with his life, I guess, besides investing. But I guess I didn't know how to put in there that, I've graduated, but I've been investing for this long, and I made this much amount of money. It's not really, I don't think it's really something you put in your resume when applying to a company. So, long story short, it was the drive of money. It was a lack of money at my previous job that drove me to getting into tech. And I'd say that if you're getting into tech, and if you're trying to start, just start. The first thing to do is just start. Not even if you don't have some direction. It's just to start something. And when you start something, for me, when I start something, I usually finish it. And that's why I decided to, that's why I decided to go self-taught, because I thought that was the best way for me, and I know myself, and I know that I can do this way. But if you're one of those that prefer a boot camp, I just always recommend just check out the boot camp, check out the references. If they have a course or list of their previous students that went and are there on LinkedIn, hit them up. Maybe ask what was their experience with the boot camp? Would they do it again? Would they recommend to a friend? That's something that you should that you should definitely look into before going into any boot camp. Because again, anybody can just claim anything online, and it doesn't necessarily have to be true. Even if they say they have a 86%, of a number of students that graduated and that got a job at least within a year. Nobody can confirm that. However, it's it's really it can be a thing for both. You can be self-taught, and you can go to your own boot camp. That's up to you. But all right, I think we've covered a lot today. On why so many people are financially struggling, and the difference between assets and liabilities, and how to take control of your spending habits, and even how simple tools like budgeting and micro investing can help you start building wealth. We also talked about the power of delayed gratification and how breaking the cycle of consumerism can change your financial future. Remember, it's not about how much money you make, it's how you manage it. Anyone can turn their financial situation around with the right mindset. It won't happen overnight, but every small step you take will add up. If you found this video helpful, don't forget to hit that like button and subscribe for more content on financial literacy and personal growth. If you're ready to take the next step, download the free budget and assets liabilities template in this description. They'll help you get a clearer picture of where you stand and how you can start improving today. Again, I was in your shoes. I was once stuck in this cycle of spending and debt, but by applying the principles and managing to turn things around and even break into tech, which opened up new opportunities for me. If I can do it, so can you. So thank you for watching. Stay disciplined, keep investing in yourself, and I'll see you in the next video.